Morning everyone. I'm going to do a video here about exits and about win rate, and just because this section makes quite a good example. So I'm just going to sort of try and highlight how taking a few more losers and holding your trades is probably the best way to go. Okay, so this is a H4 chart, okay, and let's say we were trading this and our focus is really on avoiding losses. Okay, so we'd take a short here from the high of the week, and then when we get a long setup here, the temptation obviously is to close this out so it's not a loss. Okay, and then we go long here. The first H4 bar in here are my sleeping bars, so I won't take any trades off them. So we went long here, and then maybe we'd move our stop here overnight, or if not, we would take and profit here. So at this point we feel like we're doing quite well. We've got a decent win here and a small win here, and now we go short again, and then we get this reverse trade, doesn't quite make a new low, so we'll take profit on our short, and then we go long, and then we'll get this reverse trade here, and this is not in profit, so we'll just hedge. This one would eventually stop out with this high here, and then go short here, and probably say take profit on this one, and then at the end of the week we close this one as well. So we had a great win rate this week. I think if you were just closing like that, maybe one loss and 5 wins, so 80% win rate there, and I added up the pips for that scenario, and the net pips is about 60 pips, okay, for all of that trading. Okay, so that's like if you're sort of focusing on winners, right? Now if you run the same scenario and just hold your trades, okay, so you would have gone short here, and then you would have gone long here with the low, your short got stopped out, then you take the high. Okay, now if you're holding your trades, once you have the high and low secured, then you can be more aggressive with the management of the reverse trades within inside that. Okay, so then we have this reverse trade long here, so now we've got 2 longs and 1 short, and then same trades just before the reverse trade here, then this one stops out, and then you get the reverse trade here, and then this week you just hold your 2. See, now it's really tempting to start closing profit in this scenario because you've already taken 2 losses. You'll probably net down for the week, okay, but then next week starts, and then price breaks down, so you have this short here from the current high, and then price breaks down here, and this gets stopped out, and this gets stopped out. Okay, now on this week you had 4 losses and 2 winners, so what do you have? A 33% win rate. Okay, but you make about 300 pips with this way. When it drops down, your next long trade is here. Excuse me. Now this is a time to manage some of this position. Okay, obviously at this point when we break down here, you could exit then, because you have this sort of triple stack, and that would be much more than your losses you took during the week. So when you have these ranging periods, our gut instinct initially, especially when you get to about here Wednesday, yeah, or any point in the week, your gut instinct is to avoid losses. Move to break even quickly. If there's a small profit, take it rather than taking on a hedge and letting it play out. All of these things are like natural loss aversion emotions that you're going to get. And obviously sometimes if you hold it, you could just take 5 losses, but the amount you make back when price does break away and you have 2 or 3 trades open is happens enough times, and you make so much more profit on those that it's worthwhile doing. And really, if you're going to trade this way, this is the way you should go. Okay, you should hold your trades longer. I'm not saying that you have to stack your trades, but the one thing to avoid at all costs really is this one. Okay, you've gone short from the high, and then you've gone long from the low, and this 30 pips or whatever it is, 20 pips, seems like it can't be a bad thing to take it. Okay, and this will be the eventual ruin of you, because if you trade this way, your margins are cut far too fine. Okay, so really the takeaway message I'm trying to get here is avoiding losses and taking small wins is really a bad decision. And it's quite simple to test that if you kind of doubt slightly what I'm saying, but I'm sure everyone kind of knows this already, and I'm just trying to sort of emphasize the point that we're much better to hold our trades. It doesn't mean that you have to hold over week. Let's just look at this example. Let's say we went long here, okay, and then we went short here and it stopped out, and we went short here and that one stopped out, okay, and now we're up here. Okay, taking this win is not such a bad thing, or because it's distinctly different than going long here, and when this short sets up, I've got 15 pips profit and I was in 80 pips profit, so I'm going to take that. That can't be a bad thing. That's the cycle to avoid. Okay, this is the one that's most tempting, or even the second one's tempting as well, but this is the hurdle you need to learn to start getting past, is that first opposite trade and closing out your trade then. And I think in let me go. Oh, that's why I'm on the wrong time frame. EU was a good example at the end of last week. I think most of us in the group took this long on EU, and then I took this short here. Obviously, it was really tempting when you saw this happening to close out this long, especially in a losing week. Okay, but the smart thing to do was to hold that hedge, let it play out, and you can see you've got a nice big win on the long here, and the short got stopped out. So that's it really. I just kind of want to refocus on that, holding trades a bit longer, and in fact the longer you hold them, the more your profit, the amount of your profit over a period tested increases. And we did a lot of testing on this. If you can stomach the amount of losses and drawdown to get to like 7, 8, 9, 10 surviving trades, then the amount of profit you make over a long period is massive. But that is slightly unrealistic, because you have to wait a long time for those scenarios to develop, for a trend to develop, basically. But even if you just, hold until the next day, just start with like holding for 2 days. So trades taken on Thursday, you hold through to Friday. That will help massively. And if I go to the daily time frame, okay. So just imagine that we hold trades for 2 days, okay. The high and low trades, obviously, the reverse trades within inside that you can close out. But just look how often you'd get 2 highs survive, okay. Well, this would be 3 until that close, and how often you get 2 lows, or even 3 in this scenario. And again here, 1, 2, 3, 4 lows would have been surviving at this close. 2 here, and imagine exiting at this low here, and then this low and this low, and exiting up here, and this high and this high. Do you see how often you'll get at least those 2 runs? And obviously you'll get these scenarios where you have 2 and price comes right back down and takes this one out, but then you can trade this low again and exit the 2 up here, okay. And if you were holding this high and this one and you exited down here, you see these, I know it feels like these scenarios aren't going to occur often enough, but they really do. It's just having the guts to hold through a string of losers. Basically, that's the real stumbling point. Once I did read somewhere that I think it's like 3 losses. Once a trader gets to 3 consecutive losses, his mind is looking for a way out of the scenario. Okay, he's taken too much loss, and there's like a desperation to get out of this scenario, and that's when most people make changes to the strategy. They think, okay, I need to filter out these losses, and all they do by that is they remove the possibility of getting these stacks, which would have paid for their losses and left them with a sizable profit at the end of the week. So that's it for the week. Well, not for the weekend. That's it for today. There are some more videos I want to do. Next week, I had planned not to go travelling for another few weeks, but I am actually going away next week. So obviously the site will continue as normal, but I'm going to be my personal trading. I'm going to trade on the H4, so that'll be interesting for the people who are in other time zones to see some sort of live calls on the H4 time frame. Essentially doing exactly the same thing, but just different frequency of trades. So enjoy the weekend, everyone, and I'll see you on Monday.